family, about as bad as it gets. The US is in complete meltdown, losing over 10% in the last just 2 days of trade, and our market simply unable to support the weight of this global collapse. And as we look at it this morning, the ASX losing as much as 6.3%. As you say, in the first few minutes of the morning, that is about $160 billion wiped out in the blink of an eye. It's clawed back a little bit of that ground, but really just a little bit. I mean, BHP, Commonwealth Bank shares, they've dived 8%, 6% respectively. Qantas down 6% as well. Telstra, one of the oddly outperforming stocks, down less than 1%. As for the reason for all this, well, panic, basically. Donald Trump's latest round of tariffs have gone further than expected and were built on information that didn't really make a whole lot of sense. So this is the economic effects of really a set of wars, but without the wars. This is now the most expensive two-day sell-off we've ever seen. In percentage terms, it's the 11th biggest ever, sitting between the GFC and the COVID crash. So it's just, it's kind of mind-boggling at the moment to see how significant these falls are for something that didn't really need to happen, Kate.
In superannuation, that's going to be effective. Here's some of the stocks that are falling hardest as we speak. You can see Commonwealth Bank shares, the biggest company on the market, down by more than 7%. You can also see those BHP shares were down close on 10% at one stage, now down close on 9%. And even Fortescue, iron ore, of course important, down by more than 7%. So we'll bring in more of these live prices as we get them to hand. But Laura, it really is, it's a big fall. It's reflective of what took place. Now, to be fair, this
Wall
is...
Street.
Yeah, on Wall Street. And we'll show you Wall Street as well, because let's go to the Dow Jones and what happened on Friday that has triggered this big fall in Australian markets. And what you can see here is the Dow Jones down by 5.5%. The Nasdaq, the tech-laden index, down 5.8%. And the S&P 500 down 6%. Our market has gone further. Now, the reason for this is not because particularly the tariffs. It's actually the fear of recession. So that is the big thing that's driving it. Strangely, Australia could do quite well out of the tariffs because a lot of cheap goods will flood into Australia, but that's not good for Australian industry and certainly not good for businesses in Australia trying to compete against imports. That's one of the reasons why you'll see BlueScope steel down significantly. Steel makers will do particularly poorly at that time. The second factor is the risk of a global recession. Because that's increasing, then the whole world goes into a funk. The real worry about that is the attitude of government. And of course, we're in caretaker mode at the moment because of the election. There's not a whole bunch that government can do immediately except sit back and wait and watch. But of course, it's the other response that comes from the Reserve Bank that's going to be so interesting and important as well.
Yeah, we'll get to that.
It sort of make sure we keep this in perspective. So Trump's tariffs were a trigger, and what we're seeing here play out in the Asian market in Australia this morning is beyond what the effects of the tariffs are. This is a trigger to a broader financial crisis, and that's what the risk is now, that the volatility, the losses in equity markets are starting to trigger selling in other markets, and that we reveal a problem in the global system, most likely in the non-bank lending sector, that then starts to unravel after this sort of pandemic recovery period where we've had inflation and pretty good economies, but this then starts to get sort of bad to worse. Trump's tariffs, they're part of this. They're just the trigger. That's going to have a long-term effect. He sounds like he's going to ride it out. But what we're now facing is a significant correction in financial markets, which is a little bit different to just the tariff issue.
Yeah, so what do you mean when you say Trump's tariffs and the subsequent trade war we now find ourselves in are only part of this? You think this is part of a broader correction that's done under the guise of this trade war?
Well, no, what we're seeing is the sort of volatility that we saw in the pandemic and what we saw in the GFC. And of course, what the tariffs are doing is trying to restructure global manufacturing and push it back to the US. Everyone understood that. But putting those issues to the side, we've had a very buoyant economy. We had a lot of stimulus thrown at these economies in the pandemic, and there could be vulnerabilities, whether you call it a Ponzi scheme in some part of the financial system or something else, that this is now unwinding. And it's, of course, the sort of magnitudes we're seeing is exactly that. And of course, that's what we're dealing with now. The trade war and the manufacturing issues, they're gonna play out for years, and of course, lots of different and complex impacts. But the short-term concern is that this has all just triggered some sort of financial dislocation, and that really starts to hurt everyone through big falls in equity markets, more expensive money, some businesses, some players not being able to get access to funding, that sort of thing.
Warren, when we look at our economy at the moment, both leaders, and they're right to say this, we have a pretty strong economy. We have been the beneficiaries of a very low unemployment rate for quite some time. And even economists from time to time have been scratching their heads as to how that has been able to remain so low for so long. Might this be something we then start to see a change in? Is that a serious concern? Because when you're talking about companies not getting access to capital, you have big and small businesses under pressure. The first thing they're going to look for, aren't they, is to cut workers in that aren't seen as super productive.
That's exactly right. So one of my points for a long time now has been that we've got a new world where we have labour shortages. We have never seen this, not for 60, 70 years. And that, of course, means unemployment isn't the problem. It means getting people into the right jobs is. But that also means that we will reorder the labour market. That is, some businesses will fail. A lot of people may have to change jobs. And of course, a disruptive global event like this could be a catalyst for that process. So over the longer term, let's call it the next year, 2, 3, no, I'm not worried about unemployment. Am I worried now that this could be triggering a short-term problem for our economy that means people lose jobs? Very much so. But this actually is a bigger issue. If we see Trump and this tariff policy get to its end game, and that is to shift manufacturing back to the US, that is going to have structural and permanent implications for our big export markets, that is China, Korea, Japan, as well as other emerging Asia. And of course, how we deal with that's the problem or the issue. And that means a loss of income. The government budget's going to get hit heavily by that. And of course, in the short term, the currency is going to fall a lot, as we are starting to see.